Hey, it's Nick and Jim from Peak Wealth Management back here with our chart of investor behavior, the roller coaster of emotions. The last time we were here was March 23rd of 2020, which was just so happened to be the market low of the COVID situation. But the last few weeks and the last couple of months have really felt crummy. For instance, on April 29th, we had the worst day of the year. And then just a couple days later, on May 4th, the best day in 2 years, followed by just one day later, the second worst day of the year. So this back and forth, it feels kind of nauseating.
Right. Yeah, it does, right? The roller coaster of emotion, which is why we start here, I guess, right?
Yes. So Jim, want to walk us through the feelings, right? When you have a stock that is at $700 and you want to buy it because it keeps going up, versus when it goes down to $200, and this is happening in the market now, but no one wants to step in and be a buyer.
Right. Yeah, it's funny when you look at how that tends to go, right? Where we love a stock at its all-time high and we think it's never going to, come back again if it's at its all-time low. So, we talked about this from back in 2020 with the COVID pullback because it's so applicable, right? Emotion. Investing is so emotional, right? And when you have a stock or a market, whatever, however you look at it, if it's going good, we get excited, we have a thrill, we start getting greedy, it's going to go up forever. We're never going to see, this is a great company, there's so many great things about it, euphoria, right? And then it starts to go down a little and we think, well, it'll come back, right? Denial, it'll come back. And then we start getting nervous. Well, now I can't sell now because it's already down this far. And it just keeps going, right? Panic, capitulation, and it's where we hit the lows emotionally before we start to climb back out of it and have some hope and relief with some optimism.
And we don't know where we are today, but certainly people are having these feelings of fear and anxiety and panic and capitulation, right? So this is happening in real time.
I think it's worth noting capitulation is when we see great volatility and great swings in the market, there's a lot of time where we can, we talk about that. Again, not saying we're there, but that's an indicator, right? Where we start seeing these real big swings in the market.
And let's take one more point from this chart. At the top, when people are feeling comfortable, it's actually the point of maximum financial risk. And at the bottom, when people are feeling really crummy, that's the point of maximum financial opportunity. So someone who is looking at this opportunistically, right, would want to keep that in mind. Let's take a look at another chart, which is our mountain chart over the last 50 years or so. So Jim, what can we take away from this one?
What always stands out to me about this chart, so this is showing back from 1959 all the way out to, what is the last year on there? 2022, 2020.
Yeah.
This shows different historical events and how the market has performed through them, right? So when you go back and you look and you think, Cuban Missile Crisis and Kennedy assassination and, wars and all these different things that we thought were these historical moments, and they are historical moments, but as you can see from the patterns, we have years where the market's down. We have pullbacks, but we rebound, right? And we continue to do that over time.
Including things that were totally new and terrible for the markets, like 9/11, the financial crisis, and COVID itself.
I think that's a great point, right? Because whenever we see a new event, what do people say? It's different, right? This one's different, right? Well, this one was different.
Hey, it came back here, but this time is different.
Right. That's something we hear so often, is that this time is different, right? But there's so many different events on here that were different, right? But we still,
Despite the different cause, right, the markets respond similarly.
Yeah, yep. I think that's a really big takeaway.
One thing that we want to also point on and touch on is the media. So when we're feeling this way, right, what do? We want to turn to CNBC or Fox Business for comfort, right? Well, sometimes, right, that's not always the best solution. Headlines like there could be more downside ahead for the markets, and this is just today, May 9th. So when everyone is saying the same thing, right, oftentimes we have that herd mentality, and in the markets, when everyone is saying the same thing, oftentimes everyone gets surprised.
Yeah, absolutely. I mean, it goes back to the first chart we showed about the emotions, right? And maximum opportunity is when we're at the lowest.
And our final chart for today, the calendar year pullbacks. So we talked about this in the past as well. Each orange dot reflects the market drawdown, and then the blue bar chart represents where the market finished that year. So let's take an example here. What we see right now in 22, the market is down around 15%. And that's the orange dot drawdown, but that's also where we are today, so that's the blue chart. Well, last year we had just a 5% pullback and finished nicely. And in 2020, we had a 35% pullback and finished nicely. And so oftentimes we will have a pullback, and oftentimes it can lead to a correction, which happens about once per year. But 3 out of 4 years the market finishes higher, and oftentimes much higher than the intra-year low.
Yeah, I think it's a great visual because even in the good years, we know that we've had drawdowns. I mean, this drawdown line is probably in the 14-15% range, and we can see that it's not uncommon to see a pullback that goes and approaches below that threshold. And
actually, the headline here is this correction is actually average, and we're sitting right on that average number right now.
It should be an average year, yeah.
But it feels nothing like average, right? Especially after last year with only a 5% pullback, right? We never had that big drop where we had the same feeling as now,
right.
or an opportunity, right, to buy in when the market is low.
Yeah, absolutely. And I also think it's worth noting, if you look at all the orange dots, where and the blue being where they finished, there's really none that are even that close. There's always a gap, a decent gap between the two.
That's right. Excellent point. So in closing, we'll leave you with a quote from our beloved Nick Murray. We used this one last time too. I shortened it down today though. So the quote is, "This too shall pass." So stay positive. Call us with any questions. We're happy to have a phone conversation with you, update your plan, review your portfolio, and make sure that you're on the right track. Thanks again.